Week 43 is here, and I believe it will be a very special week. A lot of earning reports coming out. In addition to this, there are things developing in Ukraine. And I think this bodes for a very volatile week. A week for trading where you either can win huge or lose huge. My name is Jim. You are listening to the StockInvest.us podcast. This podcast will last for some 20-30 minutes. And during the podcast, I will tell you what I think will happen in the week ahead of us. As I said, I think it will be a special week. And I have some key things I think you should look out for. In addition to this, since it's a volatile week, I will try to tell you a few tips and tricks on how you can play a very volatile market and how you can better your positions, your buying positions and your selling positions. What are the tools you can use? What are the things that you should look out for? In addition to this, we will have the trading tips. They will come at the end of the podcast as usual, and you will know how last week's trading tips went. First, foremost, we have to listen to a disclaimer, then I will be back with the market section, and at the end, the trading tips for the week ahead of us.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Last week I did something I haven't done for almost 16-17 years. I was day trading minute by minute, actually second by second. Those following this podcast know that last week I was on holiday in Turkey. While enjoying very nice sun and bath during daytime, I enjoyed the evenings with some trading. Many years ago I used to do this a lot, but those following me know that I've been playing the long games. I have been playing the long lines, meaning that I've been looking forward, seeing where market moved. And as I told you when I started this podcast, we were in the pandemic and the markets were really crashing. I said, buy for whatever you have, because that was an opportunity. So did I got fully exposure into the market. But as market rose, I told you, now I think market is getting too high. And I slowly reduced my exposure. I was giving you the reasoning why I thought there would be inflation, why I thought there would be a Ukraine war, and etc, etc. And as I reduced my exposure into the market, I moved more money into the banks. But as I've been telling you for the last few weeks, I think we are getting close to where the bottom will be. I'm not sure will it be here, or will it be, as I suggested before, around 8,000. I think there is more to come before we finally bottom, but it might be that we are at the short-term bottom, meaning that we can have 3-4 weeks of upturn. There are many things saying that we will do that. There is also a lot of things saying that it may just be mayhem and we will go very fast downwards given the right conditions. And this just means a lot of volatility, and volatility is where you can do a lot of money trading. So that was exactly what I was doing. I was trading. And as I told you, in a situation like this, you might just want to trade those stocks who are a bit more secure. So I was mainly trading Apple up and down. I was just using the swings, the volume, mainly looking at volume, looking at a few other indicators, of course, but it was mainly volume, just following volume, and some new signals that we shortly will present at StockInvest.us live signals. So I was actually using live signals in addition to this, the volume, and I was trading in and out, and it went very well. And I believe the week ahead of us, because that's what we'll talk about for the next few minutes, the week ahead of us. What can we expect for the week ahead of us? And as I said in the opening, in the intro, I think it will be a very volatile week, a lot of ups and downs. Many reasons to this. One is, of course, it's quarterly results. There's a lot of huge quarter results coming out. Some has already come and they have been disappointing for the market, like Snapchat, Tesla and a few others. But this week some other real heavyweights will come. And that will, of course, put it all on the market. We will try to be a bit organized. So we'll look at what are the things. Then I will check the chart. And by the end of that, I will give you what I think will be. Will it be an upturn? Will it be a downturn in general? Last week I thought it would be a red week. It became a very, very good week for Nasdaq. As I told you, it could go up, especially by the end of the week. And it really went up. Nasdaq ending the week at 10,860, up 5.22%. So very good week for Nasdaq. Not for all the stocks, but for some of the stocks. And Dow Jones had a very good week, up 4.88%, ending the week at $31,082. So you might think, well, now we really are on an upturn. That might very well be, but as I said, there are a few things that we should look out for, which can cause huge swings in the markets. And here they are. First off, there will be a lot of quarter results. As I told you, there will be major companies coming out, and these can dictate the markets. No big ones on Monday, but on Tuesday you will have 3M, you will have Google, you will have Coca-Cola, and Microsoft will also be on Tuesday. So already tomorrow, big companies will come. In addition to this will also be Visa and Xerox. These are in different segments. They will show the way for the different segments. So it can cause huge falls in IT. If Google disappoints, for instance, you can see other IT stocks fall very hard. Wednesday we will have Boeing, interesting company there. You will also have Kraft Heinz, super big company in terms of food. Food, interesting in a term like this, but you'll also have Meta, and I think Meta will disappoint, but that's just what I think. And they just keep coming, and on Thursday you will have Amazon, you will have Apple, you would have Gilead, Hertz, and they just keep on. Royal Caribbean Cruise Line, Shopify, Southwestern Airline, and Twitter. As you can hear, big companies, big things, all of them can move market, especially for the segment they are in. At StockInvest.us, I have to give a small commercial about this. You can go to our webpage, take anything you want, Apple, Meta, whatever. Look for a small tab called Earning Reports, and you will see how did they do before previous earnings reports. How did they move before, during the earning day, and after the earning day. Patterns, I love patterns. Patterns is everything I base my decisions on, because I love technical analysis, and patterns tend to repeat. It's not guaranteed, but it will give you a little insight. What you do not want to do is the following: sit in stocks. Having a good day, look at the stock market and be totally surprised by the earnings report. So you should make your decisions accordingly. Do you want to be fully exposed in your meta stocks before the earnings release? Do you want to wait investing into Apple if you're thinking about buying apples? Do you want to wait until after the earnings report? Do you want to go in before? Well, go into these web pages. As I said, it's earnings report. You can have a look at what happened during the last 3 quarter results. It will give you a slight idea. As I tell, it will not be that one top tool that will save you, but at least it will give you some background. So there is a lot and lots of earning reports coming up this week. On Thursday there will be GDP as well, and the consensus is a growth of 2.3% for United States. Will it be 2.3% or will it be less? Everyone knows that we are heading for a recession. They just try to redefine the definitions in the United States, but the recession is here. It's already here in Europe and it's already in the United States, and it will just grow as they keep increasing interest rates. But these things may not have a total effect on this GDP result, but it will give an indication. Will it be 2.3? I think the market will be very happy if it's 2.3, and even better if it's 2.4, 2.5. But what if it comes in around 2.2? How will the markets react? Some of the reason why it may come in lower could be the strength of the dollars. For those following big companies know that some of the companies that have big overseas sell, and this is another thing that you should know. The dollar is extremely strong against the euro, up 17% against the euro, and also a lot of different other currencies. So if your company you're invested in is getting a lot of the revenue from abroad, they will be hurt once they convert that euro into dollar because of the huge strong dollar right now. So there is not only benefits with the strong dollars, there are also some downsides. So you have to check the company that you're currently investing in or planning to invest in. How is it going? These are the main things. There will be other numbers as well. There will be job numbers on Thursday and a few other things. Last week's job numbers came in very good, better than expected, but we know that with the increased interest rates there will be, and you can read that. Also, I told you keep an eye on the forecasts in the earning reports. The earning reports are interesting, but it's also what they say about the forthcoming market. Like Snapchat said, we are not able to say anything about Q4 because things are just as bad as they are in the advertising market. What will the other big companies say? What will Microsoft say? What will Twitter say about the quarter result? These things are very important. Many of them have suggested that there will be a huge downturn ahead in terms of economy. But you have to remember as well, the stock market always turns before everything else do. So if all the negative news are consumed in the stock market will go up, even though the companies fail to produce. We already had a lot of cuts in stock prices. Many stocks are down anything from 20 to 50%. So there is a lot of negativism already in the stocks as they are, but there is still room for more. And that brings me to that final topic for the fundamentals before we move to the technical part. Those following knows that US had 2 talks with Ukraine last week. Being on holiday, I didn't read the news as good as I should, but I did before this podcast. I started to look into the news again, what was really moving. I thought it was peace talks because in general it's not Ukraine deciding that, it's US. When US is ready for peace talks with Russia, there will be peace talks. Until then, there will only be nice shows for television and radio. So I thought finally there will be some discussions how we can get out of this mess, because it will not get out of it anyway soon by using weapons. That will just escalate. So being fooled only reading the headlines, well, I thought it was peace talks, that they were finally talking peace talks. But it turns out that Russia has been warning that they think Ukraine will use a dirty bomb, maybe even during this week inside Ukraine. And they say this may be to try force NATO into the world, force the world to take more heavy action, a so-called false flag operation. Of course, the West say that it's Russia planning a probable false flag operation, enable them to use more heavy weapons, which I warned you about. And to be honest, I do not know what is the truth anymore, because it's just propaganda flying from the east to the west. No matter where you look, you have to look at both sides. You have to look what Russia presents, what the West presents, and somewhere in the middle is the truth. I do not know, but what I do know is that when they start signaling things like this, there is a higher chance for it to happen. And I told you weeks by weeks lately that we are heading for an escalation in Ukraine, where the use of small tactical nuclear weapons may be an option. Is more likely than it's not likely. Is this the thing that's going to happen this week? So we can have a very good week in terms of fundamentals, but any news like if this happens, it will totally crash the market. So you have to keep a good eye on the news, how they move. I'm not saying this to scare you, I'm just saying this to prepare you. The other thing is that we see changes in China, so that Taiwan conflict is coming up for sure, but I still stick to that it will be 2023. The other things, enough about these things. The other things that we like to look at is the oil price. How is the oil price moving? I say week after week that I think oil will again go up. I recommended oil when it was 20, said just buy for whatever you can, because oil will be super strong. And oil went all the way up to 120 some dollars, then fell back and has currently been moving around $80 to $90. Last week it was 87, this week it's 84, down $3. Been released 15 million new barrels of oil, putting United States to the lowest amount of emergency oil it has been in more than 40 years. This is a huge security risk, because there will not be enough oil if things suddenly start to escalate in a very bad direction, meaning that we go into full-blown war in Europe. The emergency stock in the United States is far from enough, because then there will be huge disruption in oil. All of these things tell me the same thing that I've been saying for weeks over, and which I've been predicting a long time. Oil will push up at any time. It can push extremely hard, because United States will have to buy back oil. Now they are waiting for the election to be over, because they want to keep prices as low as possible to keep the voters happy. And after, we know this because we even saw they tried to convince Saudi Arabia to postpone the oil cut production till after this election. And this is a typical thing, doesn't have to be United States. We see the same thing in Norway, Lithuania. Ever there is an election, they do things ahead of the election, trying to please the voters. So it's nothing really special about it. But as I said, they will have to buy back oil, and OPEC cutting oil production, the OPEC plus cutting production heading into winter. Anything tells me that oil will just explode. Oil might be the place where you really want to have a part of your investment portfolio. Do I follow my own tips? Yes, I do, and I'm super happy about my oil stock portfolio. Gold, I like gold as well. It's $1,658 as we speak, down $3 from last week. I think gold will go to 2,500, but it will only happen when the dollar starts to weakening. And you may say, well, I was wrong about gold, because I predicted gold up earlier while gold fell down a little bit. If you're a US trader, of course, this has not been the best for you. But if you're a European trader like I am, sitting in Vilnius, I bought gold using euro. And the strong dollar actually made that trade very successful. But once dollar starts to turn and interest rates start to peak out, because they will peak out now, they will push high interest rates a little more. The economy will go into recession, then they will start to reduce interest rates a little bit. Maybe not be this side of the year where the top finalist there, might be somewhere in 2023 where the interest rate tops peaks out. But from that point on, gold should really go. A little bit expected that gold hasn't gone before, that it hasn't started yet, but we have to see and live with what it is. And gold is 1,658, and there is really no signs that it will move fast next week. But who knows? I still like gold, and I think that's the place where you want to be as well. 10-year treasury yield 4.21, up 4.75% last week. I have heard MULN, I've heard other experts saying that the 10-year treasury will just go down. Now everything is picking up, but as you know, they've been wrong about everything. And as I told you, as the 10-year treasury will go up, the stock market will go down. Going up last week was stock market also going up. Is a divergence. Will this cause any huge effect this week? I'm not sure. We will have to look. As I said, it will be a very volatile week ahead of us. I think 10-year treasury will just continue up. You can put some money into treasury yields if you want. There is good dividends and interest rates from different instruments playing on the 10-year treasury yield, or 5 or 3 years treasury yield, or even shorter. We will finalize this market introduction with the technical picture. How does it look technical? And every week I like to give you the signals. How do the stock invest signals show, the buy, sell and hold signals, because that will give you an idea. Going back to week 40, I told you it was 12, only 12% buy signals, a record low, and that usually that will turn out to be a buying point. But we had to wait for some time. Last week it was 16, very low as well. This week, all across our board, 26,000 some tickers shows 19% buy signals. That is still low and indicate that markets may still go up. High would be around 26 to 35. Then markets are way too high, but still very low. Going to Nasdaq jumped from 12 to 20%. New York Stock Exchange from 10 to 26, and that tells me that we are getting close to the higher end of these two markets. Still somewhat low, still room to go up, but also getting a little higher. There is not that obvious buy which was just a few weeks ago. A lot of it was taken out last week. London 11% buy signals, up 2 from last week. Tokyo 23 and Shenzhen China 22. A huge jump from Shenzhen China is not going to stand. That is way too much. It's what we just call markets being too frantic, so they will be heading for a huge brutal fall in Shenzhen, maybe even Tokyo. It will start again in Asia, I think, that next round of falls. Hopefully it will hold this week, but we will see. They are still high. And that brings us finally, became a long market section this time. A few things to talk about, but hopefully you got that main thing. That brings us to the chart. And if you're listening to this on podcast on audio, remember it's also on YouTube, where you will see the chart, you will see me, and you will see any than I got from last week. I didn't become as brown as I hoped, but as I said, I was trading during the late hours. Looking at the chart, we can still see that Nasdaq is in a falling trend. Everything indicates that this will continue. It bounced up from the bottom of the trend as expected. As I told you, this support at 10,500, very, very vital. It broke it. But usually you have to have a 3% break before it is really established below. Now it's pushing up, having a bottom at 10,003. Very good, we like that. We want to see now markets continue up, then fall down, establishing a new bottom above the previous bottom. And as I said in last week's podcast, there is very little resistance all the way up to 12,000, some at the top of the trend around 11,200. But markets can, given the right moment, go fast upwards to 12,000. I will not be surprised if it happened. But looking at the chart, I see signs that 11,000 might be high. So it might be that we will have just an upturn today before it continues down. And here is the problem, because if it goes down, there is very little support. So we are still in that shaky market where, if broken, things can fall extremely fast. I will not be surprised if that happens either. Just give a buy signal from the short-term moving average, still sell signals from the long-term moving average, and the relation between the two of them called the golden cross. It's still, a death star from the relation between the short and the long-term moving average. But they are moving again towards each other. May signal that we are heading for some good times. It's so hard to say. As I said, this will be a very, very interesting week. All I can say that it's very likely that we will continue upwards, moving somewhere between 10,500 and 12,000 points. We can have that frantic week where things go really strongly up, or we can have that situation where it just continue within the trend, meaning that it starts the week struggling a little bit and it will just go sideways, ending the week somewhere around 11,000. So what do I believe? It's so hard to say because this can go both ways. The relative strength index is 51. It's not high, it's not low either. It's somewhere in the middle of the trend. We found a pivot top here in the relative strength index line. Not sure it will hold, but it will be very interesting to see how it develops. All I can say is be very careful if we start to go below 10,500 because that may push markets very down. At the same time, there is a huge upturn, and at the beginning of this podcast, I told you I would give you some trading tips, what to look for, some tools, and that we will do because we're heading into the final part, the trading session. But let's try to conclude. Will it be a green or red week? I think I really want to say that we're heading for an extremely good week, but I really don't know where this is going to end. It will be a very, very volatile week. I believe we are very close to something that can be extremely good. Will it be this week? Will it be next week? Will it be hammock? I really don't know. It's so hard to say. I just have to say something. I think by the end of the week, I actually think that we will again fall. I think that we will be lower than we are today. I just hope I'm wrong. I hope we are at the bottom. I really hope that. We will see. I love to be wrong in this case. But it will be a very volatile week. It will be a week for huge trading if you're able to put your bets at the right place. That brings us to the trading section, which will be the last section, some 5 minutes, and we will be done for this week. Stay tuned. Trading tips coming up. In the beginning of the podcast, I promised to give you some trading tips. Not only the actual stocks, but also how you can better time your trading, your buying and selling positions. And here are some of the tips. If you're a US listener, you might think that I was talking a little bit negative in terms of your country, US. But you have to be realistic. Being emotional about the stock is the one way to really lose money. So if you are a Tesla lover, no matter what, because you drive Tesla yourself, or an Apple fan, you love anything that has to do with Apple and iPhones, iMacs, whatever it is. Personal involvement is one of the things that will cause you to lose money. So always try as good as you can. It's impossible, but try to be objective. Read news, not only the news that you like, but any sort of news, and try to distance yourself a little bit. Because if some of the things I'm saying is true, and I told you a long time ago how inflation would go, you heard Yellen say the other thing, that it's just transitory, it will here to disappear. That was based on all possible indicators saying the same thing, that inflation had to go up. So it's a good exercise. Try to be objective. So that is the trading tip number 1. Do not sit in a loss simply because you're not able to cut it out of love for the stock, out of love for the company or something. You have just to be objective. You have to set a stop loss, which is the second tip. Use stop loss for whatever it worth. There is several ways and several stop losses. You have trailing stop loss, which follows the stock up, never down. You set a certain percent, or a certain amount, and as the stocks go up, the stop loss will go up. Once it starts to fall, it will be cut on from that highest point. Super nice things. Sometimes hard to put the right stop loss, and many times you will see that your stop loss is cut and the stop just continues up afterwards. You will lose some, but you will win most of the cases. And before we head to the stocks, the third tip is when trading intraday and you are trading a stock, try to look at intraday volume. Is very important. It will give you much clues. If a stock is going up intraday and the volume is going up, as it should, we like that, we want the volume to follow the stock, and it reaches the highest level intraday or close to the highest level intraday, that usually indicates that will be a downturn. So do not go in and buy a stock when the volume is already very high. It seldom leads to a good intraday trade. It may very well be for days ahead, but if you're trading intraday for a few seconds, for a few minutes, trying to get some few gaps, few dollars, few $100 or whatever amount you're trading for, like I was trading Apple last week, in and out, merely purely looking at two things. I was looking at the trend. What is the general trend? Because that decides how much I will go if I'm for a short or a buy. And I was using volume to determine, is it a good time to enter? Is it a good time to sell? Because if stock is going up and volume is going up, I like it, but reaches that high intraday level, there is a huge chance that the momentum will top out and the stock will fall. So I was doing that. Stock went up, volume went up. When I saw volume become very high, I would start looking for that sell position. Usually it could be some certain amount, 142.50, 143, some round number, or support resistance from accumulated volume. But that was the main key. And I would, of course, look, is the volume topping out? Is there enough support below? Because if the intraday chart shows you that there is a good support below, that next fall doesn't have to be big, it can just be a few cents. So you have to take that into consideration. But look at the volume also intraday. It will give you a good idea when it's good to buy. Very often I put my buys when the volume is very low. There is no real interest in the stock at the moment. I use that as a buying opportunity, especially if it's close to some sort of form of support. Like Apple in the beginning of last week was around 140s, and I knew that 140 would be a support level. So when it get close to 140, I was just buying, bouncing up to 142. I was out and kept doing that, shorting at 142, back to 141, then up to 145, shorting again, going back to 143, and etc. So volume is very good. So there you go, 3 good tips to use. Stop loss is one thing, and following trends and using intraday volume and not being personal were the three main concepts of these tips. And that will of course bring us just to the trading for the week. What are the stocks that I like to trade? Because in this portfolio podcast, I trade stocks which I think might do good, which I'm able to do some trading. And I usually buy them on Monday. Only one time I ever bought them not on a Monday, but I told you up front, I thought it would be hard to get in on the Monday, so I might wait for Tuesday to put the bets on the stocks. But usually it's Monday, and usually it's half an hour to 45 minutes, 1.5 hour after opening, because usually that's the low point of the day. Will it be the same thing today? I don't know. We will see when the dating comes. But first, let's have a look at last week's trading. Last week I told you I had 3 trades. Stromberg was open from a long time ago. Still is. I had some 10% gain last week, but not enough to cut because we bought at 26. It's still at 22 cents. But as I told you, this is a penny stock and it will move when markets are correct, and it will move fast. Is it still a buy? Yes, I still think Stromberg is very good at current level. The position is open. It's the only stock that I do not trade with trailing stop loss because, as I told you before, it's highly volatile. Then I said last week I wanted to try NEO and waste management. These were the two tips for last week because I said I did not know how the week would go. I wanted to have some risk and some good support. So NEO bought on Monday 12.25. It just started to go straight up. Tuesday it topped somewhere around $13. I had a 5% stop loss. I thought that would be enough, but the stock fell more than that, was cut at 12.55, giving me 2.45% profit. Very happy about that. Could have been more, but as I told you, I was on vacation. I used trailing stop loss and I used 5% in this case. So in total, the NEO tip was up more than 7-8%. But I got 2.45 out of it. What about waste management? Waste management bought at 156.90. Going up the same, hit 161 I think or something, then fell back and sadly was sold at 159.83, giving 1.87% profit for waste management. So NEO waste management is was sold, but Stromberg still is open. So I only have one stock in the portfolio in this podcast trading portfolio, which I start the week with. As I told you, I think it will be a very volatile week. I want to see if I can use that. I have found 4 stocks which I think could be trading candidates. Different segments, different risk. One is highly risk, the rest of them somewhat, but in general we are putting a high risk. And for sure stop loss, because this may go very wrong. At the same time it can go very good. First off, 2 TWO. I believe it could hold a good opportunity, especially if we get a red start on the day. Get in low. It shows very good signs of bottoming out. Could have some huge potential for the week. The other one is, I'm sorry I got out of NEO, but I still think NEO is there. It was cut by stop loss last week. I want to get into NEO today. Beg for a red opening. Good start. I will be in NEO again. I think there is money to be made in NEO for yet another trade. Then I told you oil. I believe strongly in oil. I think oil is just around the corner. I don't know when. We have done Chevron many times. It's been one green after the other in Chevron. It's time to do Chevron. Last time was week 39, doing 14% in Chevron. Last time we bought Chevron was week 39, as I said. Been buying Chevron on and off, always with profit. I think here comes another one. I want to go into Chevron. I hope I get the chip. I will have to evaluate the stop loss, because I think that, as I said, I think oil anytime soon will start to push hard, and Chevron will hold some of the general risk if I'm wrong, and or as I said, I think it might be a red week, but if markets really dump down, I hope Chevron can hold a little bit. We will see. It's upturn. Then the last stock. It's a stock which we traded a long time ago back, and we had 35% profit. It was week 9. We bought Mullen Automotive at 123, sold it at 167, giving 35.8% profit back then. I think we did a few other trades. I have to look back, but week 9, for those following the podcast, know that we did Mullen 35% profit, almost 36. I will try Mullen again. It's high risk. It's penny now. It's on 40 cents or whatever it is. But I had a quick look at the chart today, giving my weekly Monday predictions. I predict any stocks that you request at StockInvest.us. I give my prediction for that stock for forthcoming trade. I really liked what I saw in Mullen. I even answered a comment on StockInvest. One guy said, I think Mullen has the potential to double before Christmas, and I said, looking at the chart with that high volume at the very end on this last upturn, could signal a possible trend shift for MULN. Totally agreed in this evaluation. There is a huge chance MULN will do a double. Comes with high risk, of course, like everything else. I was so intrigued by it, so I will actually try that trade myself. So thank you, friend, for putting that comment up, letting me back into a quick look at MULN. 5 stocks: America, 2 TWO, NEO and IO, Chevron, CVX, and MULN, MULN, Mullen Automotive. That's the 5 stocks I will try. One is already open, so America. The 4 others I will try to buy as cheap as I can today. Comes with a huge risk, so we will see. It will be a super exciting week. As I told you, it will be a very special week. I might be very wrong. All of them be cut by stop loss and losses. We will see. We have done so much green in this trading tips portfolio that we can afford some losses. Of course we can. Hopefully not. Hopefully it will be great. That, my friend, is the end of this podcast. I will head for some lunch, then edit, and my good colleague will help with the upload. Very last note, for those following the podcast, you know that there is never any commercial in this podcast. Could have done that a long time ago, could have capitalized on the podcast, making money like everyone else, but we chose to not to. But I will give you tips. If you're not a StockInvest.us subscriber, StockInvest is where you will find all my tips. I'm one of the co-founders of StockInvest, work the page every day, trying to make it better for you, helping you reduce your losses, increase your gains. If you're a listener to this podcast, always remember using the code podcast, you will get a very hefty, nice discount on subscription. Do you need a subscription? Well, that's up to you. I'm not here to judge that. I just tell you that you have to say, listener, I'm more than happy to give you this discount. So we ended the podcast with commercial. Then the normal trading days back. I'm back from holidays. We are back into normal working days. But I will say, as I said in all the last few podcasts, there is more to life than trading. Enjoy your time. Make sure to drink that very good coffee. Drink that very good tea or wine if that's what you prefer. More than anything, reach out to your friends, your family, and be close because it will give you that energy that you need. Time is here. Trading days are really coming up faster than ever before. As I told you, we are getting close to that bottom. It will be an opportunity. You just have to have energy, solidity, and the things needed, because it will be a downturn like everything else, and most of you have been in a huge downturn so far, giving up on anything related to stock trading. I tell you, there is money to be made. You just have to be patient and do not use, by all means, do not use money you cannot lose. And gearing, stay away. The market is not there yet for gearing. You can use gearing when stock trends are in a really upturn, but not in a market like this where things can happen in an instant. Until next week, have a beautiful week. Shout out a comment below on the YouTube video if you like. Hit like, of course, I would love that. If not, and anyway, I'll see you next Monday. Okay, bye.